Now we're going to pivot and go deeper into the U.S. demand demand for products, where is storage and what do we expect coming at this point in time. So before we get into that, again, please like, share, subscribe. Your support is appreciated. So when we look at U.S. product supplied, we like to just look at this chart just to give it a summary of the 4-week rolling average. Where are we right now? So the current demand had a nice little spike to that 15.5 million barrels a day versus last week's drop to 14.855, bringing our average to about 15.3. So when you look at the average in general, you can see that we're coming up, but we're actually going to start tailing off here. And when you see that last surge, we will get that last pop, but we already got it right now when we look at distillate and jet fuel, and gasoline just went a bit sideways and not really getting that last push. So now next week we're going to see distillate and jet drop, and then gasoline get that one last push up before you can kind of see that last fall that then carries out through the essentially the middle of September. But on a seasonal level, seasonally speaking, we normally get that one last push, which I think is very likely especially when you look at gasoline versus the others. The only problem is, speaking to this chart, they're not coming together. They're coming 2 weeks apart. And that's going to, again, keep us fairly flat on the average as we start to roll over. And then we'll see those declines accelerate. And you saw it in 2020. We saw it again in 2019, 2018. You get this little bit of a pop, and then things continue to slow down. And as we've been saying since really March of this year, that things were going to get better along seasonal lines, just at a percentage below what is normal. So we were going to see increases in demand, but along seasonal levels, just not back to where they were in 2019, 2018, 2017. So again, you're seeing some of that similar backdrop as we start to roll over in a very similar manner, which again is just going to bring us back below on an average side of 15 million barrels a day of demand. And when we look at distillate first, you can see distillate had a draw of 2.7 million. That brought us down below the 5-year average by 11.8. But when we look at PADD 3, PADD 3 had a draw of 2.87 million, but it's still 2.5 million above the 5-year average. Where when we look at what is causing the shortfall, it's really PADD 1. PADD 1 is 13 million below the 5-year average. And that's where we're going to start to see some of this competition, if you will, as a lot of this product starts coming from Asia into the Atlantic Basin. It'll be a competition of where is the best market at this time. Is it Europe? Is it the US? And that's where we could start to see some of these imports, because when we look at imports, they fell 42,000 barrels a day, but that's still 17,000 above the 5-year average. And a lot of that shift is coming from, not only what's coming into PADD 1, but we're also going to see that increase that's going to come into PADD 5. Because remember, what's coming into PADD 5 is going to be at a 2-year high, or at least from Asia to the Americas, and most likely PADD 5, which again is just going to keep some of this elevated. But when you look at the builds, you can see it's really slowed down and is coming closer to that 29-year average, which is seeing some of that slowdown in general. And here's that surge. So we were expecting, an increase off this low, but remember we went sideways a bit last week, and we were expecting to see that bump up to about the 5-year average. Instead, we saw what should have been last week and this week to essentially combined to come up to where it is today, which just means that this was more of a makeup number. And remember, there's still trucking delays. There's still issues with drivers getting stuff into position. So we're seeing some of these outsized moves, which just means that we're going to come back down towards that 5-year average, which is going to offset a little bit of that bump in gasoline that we should see, given some of the strength that we saw in gasoline demand last week, as we see some of that trucking continue to level off. But when we look at load availability, there's still a lot of load availability. You're just starting to see some of this competition for rates where customers, businesses are like, look, I can't afford this rate. So you're seeing some softness come back in. But remember, there's a little bit of a downtime between which is coming to an end as we start coming into September. especially as we get to the other side of Labor Day, where you get this big surge to get a lot of these products for Black Friday and just for Christmas in general. You start to see that build back up, which again is going to provide support in trucking demand and underlying diesel demand. Then when we look at total car loads, remember last week we broke down how there's a shortage of employees, which is putting some headwinds on getting some of these additional trains and car loads into circulation. But there's still, again, that demand level. Coal remains supportive given just the issues that we have, where the money is in terms of bringing some of that coal, especially thermal and met. When you look at steel and power gen, coal is going to remain a little bit of that bright spot. Forest products, something similar. Grains, we're starting to come into the harvest. So again, we're going to see that bump up again. But when you look at 2020, the harvest was also strong. So, seasonally speaking, as there was a lot of demand for exports, and we're going to see something similar. So when you compare it to 2020, it's going to be a tough comp. But when you look at it as an aggregate, you're just going to see a lot of strength in that. Motor vehicles continues to see the pressure just given the supply chain, while metallics, speaking to met, steel, a lot of the just activity, that's going to remain strong. But the one that when we look at intermodal, you saw some of that drop, but again, we still see this rebounding, even with some of the issues, some of the delays that we've seen, we're going to see that come back and again, just be a little bit of that tailwind for that diesel demand. And this is speaking to what is coming when you look at the end of August, not even just the middle of August here, you can see the surge of new TEUs or new containers coming into the market. They continue to flood in. There's still a lot of that supply chain delays. We still have a partial shutdown in China. We have a lot of issues within the ports in general coming from Asia to the U.S. And again, this is going to lead to additional problems when we look at the supply chain and again, supporting some of these cost increases, some of this inflationary fears that we continue to see in the market. We have a little bit of heat remaining, so we're going to be a little toasty versus historics, but again, nothing crazy that we have seen. So this is just going to be a little bit supportive for natural gas. Again, some of that as we get into the end of the year, as we have gas sitting at about 386. It's going to be supportive, not so much a pushback to 4, but again, supporting where we are. Just like when we look at the EIA data in general, there's really not much in there to say this is super bullish or this is super bearish. It's a very normal number for this time of year. But when you consider expectations were for this super bullish number and these bullish attributes going into the fall. And as we've been saying, it's just not there. There's nothing to support that. And we continue to see that play out. So then when we look at gasoline, had a build of 700,000 barrels, bringing us to on the 5-year average. You can see it's only 6.8 million below that 5-year. Pad 1 had the drop of 2.91 million, which brings it 6.7 million below the 5-year average. But again, Pad 3 had a build of 2.1. That's now 2.2 million above the 5-year average. And when you look at blending components, this is where we want to be very specific. So blending components had a draw of 300,000 barrels, which just is, I think, indicative of the fact that there was a little bit stronger demand domestically. Some of this, build is a mixture of falling exports and imports remaining elevated, and less about local demand, because blending components having a draw is kind of giving you an idea of that there was that demand. We did blend, so that's a little bit of an offset. But when you look at local demand versus kind of the mixtures, gasoline is down 6.8 million below the 5-year average, but blending components is only down 2.1. So that you're seeing where that slowdown is in domestic demand versus where some of the shifts are externally. So then when we look at imports were down 182,000 barrels a day, coming in at 743,000 barrels a day, which, remember, we were assuming 760. So we're right where we expected to be. It's just we had that last little surge. There's a lot of things in terms of timing, in terms of getting some of this stuff through. And then you can see, but as we come into the end of August, the comps get a bit easier. So we normally see a drop in imports. We normally see that. So even though we're back to 743,000 barrels a day, that's still 57,000 above the 5-year average, because we still see that. And it was driven by Pad 5 with an increase of 107,000 barrels a day. Remember that timing delay where Pad 5 continues to be a net importer. I'm sorry, a much bigger importer than historics, as Pad 1 is kind of holding at a fairly steady line, which will come under pressure when you look at the amount of that drop in imports into from Europe into the U.S., dropping to that, about 200,000 barrels a day. That will start to increase a little bit based on some of the flows that we've seen last week, but there's shipping time. So again, we're going to see that drop, and then we're going to have some lumpiness, lumpy offset that comes into Pad 5. But then when we look at storage, as we were saying, this sideways move, and here you are sitting here at the 2021 lows. But if you just look at where we should be today, we should have a very steady move down, and instead we're just going sideways. Now, again, we expect to see draws in gasoline. That next week should be a draw. It's just, what is the pace of the draw? And that's where we continue to remain against, I guess, the bullish sentiment or the prevailing market view, where we're just not going to get this huge drop. It's just going to be a very kind of steady move along seasonal lines, just not to the same pace that I think it was hoped for. And this is when we looked to last week, where U.S. gasoline demand rose 1.4% from the prior week, but came in just behind the week of July 25th for setting a new 2021 high. So that's the gas buddy side, which again is showing you what people are doing at the pump. But then when we look at what happened from Descartes, which is looking at some of that mobility side, Descartes Labs saw a decline of 1% to 9.423 million barrels a day in the week ending August 13th. So Gas Buddy saw an increase of 1.4%. Descartes saw a decline of 1%, and it's just a matter of what are they looking at. And Gas Buddy is looking at how often are people going to the pump to fill up, and then how many people are actually driving. So that's where you get some of this, some of that adjustment that we have to look for. So we expect to see the Gas Buddy data so far has come down, where this past Monday had a plunge of 4.8% from the prior Monday, and it was 4.7% below the average of the last 4 Mondays. Tuesday was down 3.4%. which was 2.3% below the average of the last 4 Tuesdays. So you're starting to see that progressive drop as school starts up in some locations. You're starting to see school coming back. You've seen some companies kick out when people are supposed to come back. There's been some companies that had people back have now put them back to work from home. So again, you're starting to see some of these shifts, which again is just going to put that pressure where we have likely seen the peak over these that week in July 25th, the week of August 13th. And now we'll start to continue to see that decline. But again, we should get one more pop on the EIA data supplied side. So then when we look at gasoline prices, they were up slightly, just essentially hanging in at $3.17. Still seeing a lot of that overhang. And as we said before, we were going to see people changing behaviors much lower than in previous years. And I think you started to see that, and that's continuing to progress as we did get a small decline in diesel prices from 3.364 to 3.356. Again, still small decline, but still a decline nonetheless. But again, you're seeing where this is going to put more pressure on the supply chain and causing some of those cost increases to remain. So just looking at that blending component side and to put it into perspective, you can see that we're turning back up. And as we were saying previously, we expect this just to continue that kind of sideways move. We'll still see some of those draws, but again, not at the same level that we have, and still seeing some of that kind of sideways glance when we look at what has come. So then when we look at product supplied, you can see that big drop for 2000, back to that 15-year average. So we keep seeing these pops and then this cool off. So we'll see one more, and when we look at the 15-year average, you can see there's still that one kind of seasonal bump up, mixture of preparation for Labor Day, some of these different shifts, which again is going to have that one more last bump. But then when we look over the last 5 years, you can see that we're continuing to remain below, 2016, 2017, 2018, 2019. But when we look at what normally comes, that's what I'm talking about here. When you look at 2018, 2017, that's you see that normal kind of pop. Same with 2019. You have that one last move higher, and then you start that seasonal decline into shoulder season, which we expect. And you're starting to see it play out in this Google data. Parks are slowing. You're starting to see some rollover in transit stations. Same with workplaces. You're starting to see some of that softness come back. Mixture of Delta variant, mixture of just a shift of consumer behavior. And then again, some of that seasonal decline as we saw in last year as we came into the end of, past that middle of August and as we come into the end of the year. The end of the summer. When we look at what has happened, Italy continues to be strong, continues to move about. But when we look at the other countries, again, you're seeing things essentially move pretty stably in this level. And when we go back to the first segment, when we looked at road congestion, that's looking at cities, and it's just showing that the urban side continues to be an avoidance. You're not seeing a lot of driving, but overall you're seeing some of this normalcy. But when we go back to last year, again, we're seeing a little bit above last year in terms of some of that demand, but nothing crazy above that, above those levels, which will start to come down just along that seasonal capacity. Propane remains strong. Here you can see that there was a build of 1.43 million. It's still 13.7 million below the 5-year average, and it's really driven by Pad 3, which is 11 million below the 5-year average as exports remain robust. They normalized a bit this week, but again, we're still going to continue to see this strength, and we're still tracking pretty close to where we were in 2017 and in 2018, as we should still be in that building season, but again, you see just the pace. So then when we look at administered doses of vaccines, you can see that things have accelerated a bit in some areas. The world has been fairly stable at about 0.44. Germany has slowed a bit. France, India has picked up slightly. U.S. By about 3 basis points, which again is still people are reacting a bit to the increase of COVID cases in the U.S., which has sparked some additional movements, which we can see here. When we look at India, it's still painfully slow, which I think is a bit of an overhang. But you can see the U.S. is now at that 51%. With 9.1% getting their first dose, and that's where we saw kind of that biggest bump. And that's, again, people saying like, all right, well, let's just get off, just go get it, try to avoid this. So that's that little bit of a bump that we've seen. But you can see a lot of these places are really leveling off, as there's some that don't want to get it, religious, medical reasons, kids that can't get it when you look at just the population in general. So we're starting to come to that, I think, that flatlining of who's going to get it next. Then when we come to the jet fuel side, there was a small build of 90,000 barrels. We expected to see a bounce. When we actually didn't. We thought it was going to come sideways. At that sideways move. Instead, we had an overshoot to the downside. Now we have a bit of an overshoot to the upside. So we will see a decline, but we're not going to come back to that last week's low. Instead, we're going to probably split the difference between the two and come closer to where we were at the end of June. And it's just because we're not seeing, we're seeing a cut in departures. We're seeing a slowdown in TSA movements, which is very much along seasonal lines. And when you look at the data from 16 to 19, you can see that we get this one last pop, which we had, and then this big drop off, which again is going to be something very similar as we've been talking about we're going to move along seasonal lines just at a pace below what those 4 years worked out to be. And here's when we look at some of that rollover. North America is starting to come down a bit, just along those seasonal levels. Rest of Asia Pacific, hard drop off as we see some of those declines in other areas of Asia, with things starting to flatline in Europe and the rest of the world. And here you can see the average number of departures per day declined 2.2% week on week at the airports, tracked by, again, BNEF. And when you look at the declines, departures in the UAE and Canada led growth, while departures in China led declines, again, as they continue to fight their most recent outbreak. Globally, as we look forward, passenger flight schedule for the 11 weeks ahead declined by around 1.7% since last week. APAC cut 11.9% of the flights scheduled to depart this week compared with this time last week. And again, just seeing some of that hesitancy, but some of that is drops because of seasonality. Others is because of COVID. So again, you get kind of that mixture in general. And then here's where we're starting to see this more aggressive drop, as we've been talking about: lower highs, lower lows, and we're going to continue to see that as we progress forward. This last little pop that we see in 2019 is, you guessed it, Labor Day. So, we'll see one little pop, like one last head, that move higher. But just given where people are, how people are starting to school, there's some concerns about going to school. What should kids do? Vaccinations, masks, all this nonsense. So just that alone, I think, is going to keep a bit of that COVID-19 overhang on Labor Day travels, which again we'll see an increase, but not to where we were. So we'll continue to see that seasonal decline, below these levels from 2019. And then when we look at restaurants, again, we're seeing something very similar. Things have slowed down a bit more when we look at the weekends, again, 0% to 5%. And then when we look at weekdays, an increase of a decrease of 10%, again, something in line with what we've seen. So not too much to update. We should get one last push in gasoline, while diesel and jet have a little drop back, and then this will be the end, if you will, to see summer driving. So some have now kicked the can and saying that we're going to see a lot of growth and strength in the fall. And again, it's just we're seeing this constant movement of the goalpost, but we try to stay true to the data and what the data is telling us. So that's what we're seeing right now. But now in the next segment, we're going to go more into what's happening globally, especially when we look at Asia and how the U.S. is fitting into, what are exports doing and what do we expect to happen going forward over the next few weeks.